Hello everyone, welcome back to my YouTube channel. In the last class, we learned about provisions, right? So in today's class, we are going to learn about reserves. So let's see the meaning of reserves. Reserves are that portion of profits which a business keeps aside for future needs or unexpected losses. Reserves means what? That portion of profits which a business keeps aside for future needs or unexpected losses. Means every year business or company they keeps aside some portion of profit for what purpose? To meet the future needs or unexpected losses. Clear? So here reserves are created out of business profits. Reserves are created out of the business profit. Every year company or business keeps aside some amount in order to meet the future needs or unexpected losses. See, provision means what? In the last class we studied that provisions means keeping aside a part of the profit to cover known expense. To cover known expense means company knows, right? Under provision, company knows the amount of expense, so they keep aside a part of the profit to cover the known expense or loss that is expected in the future, right? Like, so here unlike provisions, in reserves are the appropriations of profits. Clear? To strengthen the financial position of the business. So reserve, it is not a charge against the profit, as it is not meant to cover any known liability or expected loss in the future. That's why the reserve, it is not a charge against the profit. So in simple words, reserves means what? Profit earned by the business, they will not distribute that profit, that is kept for future, that is called as reserve. Clear? So I hope the meaning of reserve is clear to you all. So this reserve, it is created out of business profit and it helps in strengthening the financial position of the business, and it is shown on the liability side of the balance sheet under reserves and surplus. Clear? So let's see why our reserves are created. Why company create the reserves? Here companies create reserves for meeting future uncertainties. Meeting future uncertainties. It means what? It means keeping money aside so that the business they can handle unexpected losses or problems in the future without difficulty, because they already created the reserve, they already keeps aside some amount. Clear? That is what meeting future uncertainties, because future is always uncertain, right? And second one is expansion and business growth. Expansion and business growth, it means what? It means here reserving some profit to invest in future projects, that is expansion and business growth, like opening new branches or buying new machines or increasing production capacity so that the business can grow bigger and stronger, right? That is what expansion and business growth. And third one is replacing old asset. Replacing the old asset means here company keeping aside some profit so that the business can easily replace the old or old assets like machinery, vehicles or computers when needed in the future. That is what replacing old assets. And next one is paying dividends in bad years. Paying dividend in bad years. It means what? It means saving some profit as reserve so that even when the business earns low or sometimes no profit, right, in a particular year, so it can still pay a steady dividend to the shareholders. Why? Because they already keeps aside some amount for future needs. Out of that profit, they will pay the dividends to the shareholders in the bad years. Clear? And improve financial stability. Improve financial stability means maintaining the reserves so the business stays financially strong and they can smoothly face future challenges or losses, right? That is what improve the financial stability. So companies creates reserves for meeting future uncertainties, expansion and business growth, replacing old assets, paying dividends in bad years, and improve financial stability. So now let's see the examples of reserves. What are the examples of reserves? So examples of reserves are general reserve. So what is the purpose of general reserve? For strengthening the financial purpose. And workmen compensation fund. Here it is created to meet compensation that is payable to the workers, like in the case of accidents. Clear? And investment fluctuation fund. So it is to cover the loss caused by fall in value of investment. That is what investment fluctuation fund. And capital reserve that is created from the capital profits. Clear? Not from the business profits. And dividend equalization reserve that is to maintain steady dividends in the low profit in years. Here we have already learnt, right? And next one, reserve for redemption of debentures. Reserve for redemption of debentures means to repay the debentures in future. So these are some examples of reserves. Clear? Now let's see the types of reserves. Types of reserves. What are the types of reserves? See here. A reserve is created by retention of profit of the business. Retention of the profit of the business. They can be either general reserve or specific reserve. That is on the basis of retention of profits. Retention of profits. Clear? So let's discuss about general reserve. What does it mean? It means when the purpose for which reserve is created is not specified. So general reserve, companies will create the general reserve, but here the purpose is not specified. We can use that profit for any need or any loss. That is called as general reserve. Means it is not it means it is not a specific purpose. Here we will not use this reserve for specific purpose, used for any future need or contingency. Clear? So it is also called as free reserves. It is also called as free reserves. That is what it means. That is not means for a specific purpose. It is used for any future need or contingency. And general reserves strengthen the financial position of the business. So here general reserve, they can be used for any future need like expansion of business or paying dividends in the year of low profit or meeting any unforeseen losses or emergencies. Clear? In this or in any other case, we can use the general reserve. There is no specific purpose. Clear? And second type is specific reserves. Specific reserves. It means what? As the name only suggests, it is the reserve which is created for some specific purpose. Clear? And can be utilized only for that purpose. Here this reserve we have to utilize for some specific purpose, and here we have to use that reserve only for that purpose. Clear? For example, see, dividend equalization reserve means this reserve is created to maintain the dividend rate. See, in the year of high profit, amount is transferred to dividend dividend equalization reserve. When in the year of high profit. So in the year of low profit, this reserve we keeps aside, so that amount that is used to maintain the rate of dividend. So mainly this dividend equalization reserve that is created to maintain the dividend rate. See here, specific purpose is there, right? And second one is workmen compensation fund. Means it is created to provide for the claims of the workers that is due to accident. Clear? And next one, investment fluctuation fund. Means that is created to make for decline in the value of investment. That is Due to what? Due to market fluctuations, right? And next one, debenture redemption reserve, that is created to provide the funds for redemption of debentures. So these all are specific purpose. Here this reserve we have to use only for some specific purpose. But general reserve, that is not specified. We can use for any our future need. Clear? That is the differences between general reserve and specific reserve. Now let's see the other types of reserves. See here, reserves, 1 minute. Yeah. Reserves are also classified as revenue and capital reserves according to the nature of the profit out of which they are created. General reserve and specific reserve, they are retention of profit. They are based on retention of profit. Here capital and revenue reserves are, they are based on the nature of profit. So in that, first one is revenue reserves. Revenue reserves. It means what here? Revenue reserves means they are created from revenue profits. Revenue profits means what? Profit earned from normal business operations. Normal business operation means the revenue reserves, they can be used to pay the dividends. Revenue reserves used to pay dividends. Clear? Revenue reserves, they are used to pay the dividends or meet any business needs. That is what revenue reserve. For example, general reserve, workman compensation fund, investment fluctuation fund, dividend equalization reserve or debenture redemption reserve. Clear? These are the examples of revenue reserves. And second one is what? Capital reserves. Capital reserves. It means what? Here capital reserves are created out of capital profits which do not arise from the normal operating activities. Means they cannot be here. These capital reserves, they are created out of the capital profit. They are not arise from the normal business operations. Revenue reserves, they are created from the revenue profits, means profit earned from normal business operations. But these capital reserves, they are not created out of normal business operations. Profit earned from the normal business operation. This is the main difference between revenue and general capital reserves. In the revenue reserve, what we will do? We used to pay the dividends. But here cannot be capital reserves. They are cannot be used to pay dividends. This is also one of the differences between revenue and capital reserves. Clear? For example, revaluation reserve. So it is created when a company revalues its financial accounts. Clear? And the increase in value is set aside as reserve. That is what? The example of capital reserve. Or you can take share premium. Share premium. So here it is created when a company issues shares at a price higher than their face value. So and the extra amount that is received as premium, that is kept in this reserve. So example of capital reserves are share premium, example share premium, and revaluation reserve. We write down here revaluation reserve means what? Here the companies revalue its financial account. If there is increase in value, that is set aside as capital reserve. And clear? So these are the examples of capital reserves. Or you can take another example as capital redemption reserve. Means that is created when the company redeems its own preference shares out of profits. Redeem, it means what? To pay back or buy back something that was issued like shares, debentures, bonds, usually at a fixed rate or on demand. Clear? So it ensures that company's capital is maintained even after paying back to the shareholders. That is what capital redemption reserve. That is also one of the example of capital reserves. Clear? So revenue reserves and capital reserves are another two types of reserves, that is based on the nature of profit. That is based on the nature of profit. Now let's see the other types of reserves. In that, secret reserve. Secret reserve, that is other types of reserves. So let's discuss about secret reserves. Here, secret reserves, it is a type of reserve that is not shown openly in the financial statements. Means this secret reserve we are not showing in the balance sheet. It is hidden from the public and outsiders. It is also not shown in the balance sheet, and at the same time it is hidden from the public and outsiders also. That's why we will call it as a secret reserve. Then how we will create these secret reserves? See here, it is created by undervaluing assets. It is created by undervaluing assets. It means what here? When a company shows an asset at a value lower than its actual market value. Clear? Company shows asset value lower than the actual market value. So the difference becomes secret reserve. For example, a building actually worth rupees 20 lakh. Actual value. Clear? But in the balance sheet, it shown as rupees 15 lakh in the balance sheet. Clear? So the difference, how much? That is rupees 5 lakh. It becomes the secret reserve. Clear? In this way, secret reserve is created. And second one is overvaluing liabilities. Means when a company record the liabilities more than what it actually owes, the extra amount becomes a secret reserve. Means, for example, actual liability to creditors is rupees 3 lakh. Rupees 3 lakh. This is the actual liability to the creditors. But the company records it as rupees 3,50,000. Company records as rupees 3,50,000 means hidden extra amount, that is rupees 50,000. It is as a secret reserve. Clear? And third one is not recording some incomes. Not recording some incomes means when the company receives income but does not record it in the books. Means the profit appears here less than the actual. That withheld income becomes a secret reserves. That is what not recording some incomes. For example, actual income received, how much? That is rupees 1,20,000. But income received in the books, they mentioned only rupees 1 lakh. 1 lakh means 20,000. It becomes the secret reserve, or 20,000 it is the hidden income. Clear? Now fourth one is recording excess provisions. Recording excess provisions means what? It is a charge made for expected future expenses or losses. For example, when the company creates a provision that is more than what is actually required, the extra amount becomes a secret reserve. For example, actual doubtful debts expected 20,000. Doubtful debts expected. Clear? How much? 20,000. But the company, it creates the provision for rupees 30,000. Company creates the provision for rupees 30,000 means rupees 15,000. Rupees 15,000. It is what? This is the excess provision. Excess provision. This acts as a secret reserve. Clear? So secret reserve, it is created by undervaluing asset, overvaluing liabilities, not recording some incomes, and recording excess provisions. Now the question arises, why secret reserves are created? Why the company will create the secret reserves? So what is the purpose? That is to strengthen the financial positions secretly. Means they secretly keep extra money aside so that the business remains strong during future problems. Strong during future problems. Right? And second purpose is to face future unexpected losses. To face future unexpected losses means to keep hidden funds ready to handle sudden and unexpected losses in the future. Clear? And to maintain the stability of profits means keep profits steady each year so that by hiding the extra profit in good years, so we can use it in the bad years. And fourth one is to reduce taxable income. Here lower profit of the company means the company or business has to pay less tax. Clear? So to show the lower profits, the business has to pay the less tax. Clear? That is, so why secret reserves are created? To strengthen financial position secretly, to face future unexpected losses, to maintain stability of profits, to reduce taxable income. Here in fourth one, the company or business, they shows lower profit. Why? Because then they will pay less tax. If they show the higher profits, they have to pay more tax, right? So they will show only the lower profits. Then they can pay the company they has to pay less tax. Clear? So this is the other types of reserves, that is secret reserve. So here reserve concept is over. So I hope this concept is clear to you all. Reserves means what? That portion of profit which a business keeps aside for future needs or unexpected losses. Clear? I hope this concept is clear to you all. If not, please leave a comment. Thank you.